Well, as markets wrap up a messy month, the chart master here is homing in on 3 areas of the market that are hoping to shake off an ugly year. So, Carter, what are the 3 areas?
Right, so rather than picking them myself, I just sorted by what is the worst. Let's look at the caboose, the rear. So the 3 worst areas of the market, of course, banks, utilities, and precious metal stocks. And you can see it here very clearly, right? You have the market up 11.7, and then in descending order, gold miners, as represented by the Philadelphia Gold and Silver Index, down 11. Utilities, the Dow Jones Utility Average, over 100 years old, of course, and then the KBW banks bringing up the rear at 22. Let's look at the chart of all 3 of these areas or themes. There's not a one that's good, which is to say, I think even these that are the most beaten up go lower still. So you can see on the screen here, converging trend lines. You can interpret however you want, but it's broken through to the downside. That's the bank index. Take a look at utilities. As measured again by the Dow Jones Utility Average. We've just taken out those lows of almost a year and a half ago, breaching the lower band. And then finally, of course, and you can see it here, is the Philadelphia Gold and Silver Index of important mining stocks and the precious metals, all really quite similar in terms of what they've done. So big disparity with the market, and yet one might think maybe we should bottom fish, but I wouldn't.
That's interesting. And what utilities and banks tell you is rates are going higher. And they tell you that we're worried about credit, we're worried about alternatives to utilities and some of that yield income and actually the pressure that's on utilities to have the kind of free cash flow that they're generating. With precious metals, to me, it's more or less a pretty simple, hey, the dollar kicked butt in the last 6 weeks and essentially rose 6% off of a level where people thought it was actually going a lot lower. The correlations there are extremely high. Everything that we're saying about this setup sounds like a world where, especially if inflation's kind of peaking, sounds like the time you want to buy gold. And I think forget the industrial uses of gold. Think about the monetary policy dynamics here. I think you're buying GDX here, but I also think if you look out some of the other resources, I actually think that resource names look pretty interesting here as well, even integrated miners, and I actually think oil's going higher.
Should like an Alcoa or a BHP or Rio, that
yeah,
kind of stuff.
and look at iron ore prices.
Right.
They've really started to rally. It's not like China's been given that big of a shot in the arm, but I think we're seeing that across the commodity complex.
If China shows a little sign of life, then that could be a lot in terms of the turns here in multiple.
Yeah, for commodities, I tend to agree with you spot on in terms of precious metal companies. I mean, the dollar setup really has challenged that there, but I think that fundamentally that's probably where I would like to be. Banks, I'm not sure if it's that yields are going higher or if that credit is going wider. I would expect, especially high yield credit, to be wider given what we've seen in rates. Yeah, rates have moved higher, but that spread has kind of remained pretty tight, and I'm not exactly sure why.
Steve, would you dare to bottom fish an area that the chart master says not to bottom fish?
No, I trust the chart master on that
well, you're the only
premise
one
that
here.
that he's making that he's making on that. But you know, there's so many correlations. Carter likes to talk about correlations, and when you look at gold, I can't help but look at Bitcoin, and you can't help but look at crypto. And then when you look at gold, do you do the miners or the commodity? And I think that we've talked about this long enough on the show for, you know, a decade and a half now, that when you think gold is going to be moving, miners actually have a 2 or 3 to 1 ratio. They move more than gold, both up and down. So if you think it's going higher, buy the miners.
Miners or the metal?
Miners. I mean, I agree with that analysis on the beta. I think miners, I say this a lot about a lot of different types of miners. I just think these companies are run differently than they used to be. I think there's been a capital discipline. In fact, that's part of my argument why copper prices stay stubborn. I mean, Dr. Copper is an economic barometer, but if there's been such a lack of investment in copper mines and infrastructure, and I think across the precious metal space, we also don't see that M&A mania in the space that I think has forced these companies actually to do their job. So I like GDX. I like silver over gold, and I continue to think uranium goes higher, too.
I have a question for you, Carter. Do you ever override how you read the charts with your fundamental belief in something?
Never. Because then what would be the point? I mean, you got to stick to your discipline. Unless you can get a magic trick going like last night, then, you know, all
that wasn't magic.
That wasn't magic.
No.
I mean,
man,
he was in our heads.
Plus, he doesn't have a fundamental belief.
Dangerous place to be.